we are moving on to the next chapter. Chapter 8, it is journal. See, in between chapter 6 we finished. Now we are starting chapter 8. So in between there is chapter 7, which is purely a theory chapter, only a small chapter, where we are discussing about source documents, the supporting documents. That we'll discuss later. We'll learn the chapter later, because this chapter is based on the rules of debit and credit. So actually this is the continuation of chapter 6. So we'll do this chapter now. Okay. So we are discussing about journal in this chapter and how to write journal entries. You know the meaning of journal. What is journal? Journal is the book of original entry, or it is also known as book of prime entry, in which transactions will be recorded for the first time. That is why it is called book of prime entry or book of original entry. And it would be written in a chronological order, that also we discussed. What is chronological order? The order in which the event or transaction occurs. As and when it occurs, you will immediately record that transaction in the order of its date, order of its happening. So journal, it should be read as journal. Don't read it as journal. R is silent there. And the other names also we discussed. Book of original entry and book of prime entry. And what do you mean by journalizing? The process of recording transactions in a journal is known as journalizing. What is posting? The process of transferring journal entries from journal to ledger. That is known as posting. So all these terms you must be familiar with. Now we'll see how to write a journal entry. So for that you have to first think of its nature, see whether it should be debited and credited, then only we can write a journal entry. When I say it is too lengthy, but don't get confused, don't get worried, it's so easy, it's very easy chapter, so you just have to listen carefully. Yeah, so we'll see how to write entries. That is, you give the heading journal, we'll write accounting entries, the specimen entries now, then we'll move on to problems. The basic entries we'll discuss first. We'll take first one. You write first one, cash purchase of goods. Cash purchase of goods. Yes. So first we have to identify which are the two items involved in this transaction. We know that every transaction has two aspects, that one would be debit, the other one would be credit. So first you have to identify which are the two items in this transaction. So which are the two items in this transaction? What can we say about this? You purchased goods for cash. What are we getting? You are getting goods. So one item is goods. The other item would be you are giving something in return, that is cash. So goods and cash, these are the two items in this transaction. What is happening to goods? What is happening to goods? Goods we are getting, and the receiving aspect we know that should be debited, and the giving aspect it should be credited. That way you can understand which one to be debited, which one to be credited. Or you can apply modern classification here. Any rule you can apply. Any rule means rules which we learned, either the traditional approach or the modern approach. Anything you can apply, that is up to you. According to your convenience you can choose the rules, but finally that should be correct. I mean, if you take the double entry system, debit the receiving aspect, credit the giving aspect. So according to that, this would be debited, DR means debited, and this would be credited, because this is the receiving aspect and this is the giving aspect. Understood? Or if you think from modern approach, what is the nature of goods? Goods means basically an asset. When asset increases, what should we do? When asset increases, we have to debited. What about this? Cash. Cash is also an asset, but when cash decreases, we have to credit it. That way also we can find whether it is to be debited or credited. Understood? Or traditional approach also fine. But here the double entry system would be easier for you, isn't it? Debit the receiving aspect, credit the giving aspect. So that way you identify goods to be debited and cash to be credited. Instead of writing goods account, we will write now purchases account. So don't write goods account from now onwards, you must write it as purchases account. Clear? When you purchase goods, you write purchases account. If you are selling goods, you write sales account. Don't write it as goods, because sometimes goods would be sold, sometimes it would be purchased. So you have to specify. Now we'll see how to write the journal entry. So which one to be written first? That's a question. The item which we debited should be written first. That means purchases account should be written first. So we'll write purchases. From your margin you can start writing purchases account. You just write the short form A/C. That is how you have to write the entry. Leave some space, put 3 dots. This is the format of an entry. Write DR. DR means this account to be debited. Clear? This is your margin. Suppose this is your margin. Okay. So purchases account, 3 dots, DR. Then on the next line, you leave some space on the left side. Then you write 2, and this T must be in capital letter, D in capital letter, A in capital letter. Just like I wrote, you have to copy. 2, what is the item to be credited? The cash. So write cash account. This is how you have to write one. This dot is not compulsory. I accidentally wrote, but here you have to write. That's a format. Purchases account debtor to cash account. This is how you have to read it. This is how you have to read a journal entry. Purchases account debtor. This should be read as debtor. Don't say like debited. It's an account to be debited, but when you read it, you must say purchases account debtor to cash account. Clear? So somebody asks you, what's the journal entry for goods purchase? What should be your answer? Purchases account debtor to cash account. Because goods we are getting, cash is moving out. So this is the entry. Clear? So that is the first transaction. You need not write all these. This one I wrote for you to understand. You write the heading and the entry. That's enough. Then second one. That is cash sales. Cash sales. Yes. So which are the two items involved here? Cash and sales. What is happening to cash? Are we getting cash or are we losing cash? When you sell something, we are getting cash. So cash is to be debited. Then sales means instead of mentioning it as goods, we are specifying it as sales. And what is happening to your goods? It's moving out. So what goes out should be credited, or giving aspect should be credited. So what is the journal entry now? Which one will you write first? The debit aspect should be written first always. So the journal entry will be, you start from the margin, cash account, leave some space and put 3 dots. Write DR. The next line, leave some space on the left side. You write 2, T in capital letters, and you write the other account, that is sales account. So the journal entry is, how will you read it? Cash account, debtor to sales account. Okay. The next one is credit purchases. The third one, credit purchases. Yes, credit purchases. Which are the two items involved? One would be the purchased item, that is purchases. Instead of writing it as goods, we are writing it as purchases. So one is purchases. Can we write the other item as cash? Is cash moving out? What is the meaning of purchased on credit? You are not paying the amount right now. Only after a particular period you will be paying the amount. That's meaning of credit purchases. So the person to whom we have to pay money is called as creditor. So now we have a creditor. Don't write it as debtor, it is creditor, to whom we have to pay money. Now we have to see which one to be debited, which one to be credited. What is the receiving aspect here? The receiving aspect is, if you identify one, that is enough. You need not be too intelligent for this. Just identify one item, the other would be opposite. If one you identified as debit, other would be of course to be credited. Okay. So here, which is the debit aspect? You are getting goods. The receiving aspect is the goods, the purchases. So the journal entry would be purchases account, leave some space and put 3 dots, debtor, the next line leave space on the left side, then you write the credit item, that is creditors account. So this is the journal entry, that is purchases account debtor to creditors account. In problems they will mention that person's name, the seller's name, so you can write his name like Rahul's account, Ram's account. Clear? So it's purchases account debtor to creditors account. Then the next one is credit sales. Fourth one, no? Yes. Credit sales. You can underline the headings. Okay. Yes, credit sales. So identify the two aspects, two items. One is sales, one is debtor, to whom we have to pay money, isn't it? We are selling on credit means right now we will not receive the amount. So that person has to give us amount on a later date, and that person is to be termed as debtor. Don't get confused between debtor and creditor. That's why I asked you to learn that basic accounting terms clearly. See, every portion, it is actually continuation. Theory portions are also needed. It's very much important, though it is a problem paper. Since we are learning this for the first time, since you people are learning this subject for the first time, theory portions are also very much important. So you should know the term meaning of each and every item, so that you can write these entries very easily. Yes, so sales and debtors, which is receiving aspect, which is the giving aspect. What is moving out from the business? What is moving out? The goods. We are selling goods, so goods are moving out from the business. That means sales should be credited. If you identify one, of course the other one should be debited. Debtors should be debited. So what is giving out or what goes out here is the goods. Instead of goods we are writing it as sales. So sales should be, what goes out should be credited. That is the rule of real account. That also you can apply here. Debit what comes in, credit what goes out. Any rule you can apply. Okay. Debit what comes in, credit what goes out. Here the sales or goods going out. So sales should be credited. So the journal entry will be, write the debit aspect first always. It would be debtors account, debtor to sales account. Debtors account, debtor to sales account. That is the entry. Next one, paid expenses. Paid expenses. Yes. So which are the two items? Suppose you take it as paid salary. Which are the two items? One will be salary. Instead of salary, we will just write it as expense now. So expense, one is expense, or if it is specified as salary, you can write it as salary. Okay, so one is expense, the other one is cash, because when you pay something, what is moving out, what is going out? It is the cash moving out. Or sometimes you can pay by check also, then you must write it as bank account. If you are using check for payment, write it as bank. Nothing is mentioned, you can either write cash or bank, both are correct. So expense account and cash account. What is going out? The cash is going out. What goes out must be credited. Credit what goes out. So what will be the journal entry? So automatically the other one should be debited. So the journal entry will be expenses account debtor. See, there is no particular space actually. You need not measure the space and put 3 dots. Only thing is leave some space and put 3 dots. Okay. Expenses account debtor to cash account. The credited account is cash. Then 6th one, received income. Received incomes like received commission, received interest. So received income. So which are the 2 items, 2 accounts? One is income account, and what are we receiving? We are receiving income in the form of cash. So these are the 2 items. What comes in must be debited. That's the rule of real account. So what comes in, or the receiving aspect here is the cash. So what will you debit? Cash account debtor to that income account. You can specify the income like commission, interest, whatever mentioned in the question. Okay. Then 7th one, cash deposited in bank. Cash deposited into bank. Yes. So which are the 2 items? You are depositing your cash balance into your bank account. So cash in hand will now become cash at bank. So the 2 items involved here is, one is cash, the other is bank. When you say simply cash, it means the cash in hand. When you say bank, it means the cash at bank. So these are the 2 accounts. What is moving out? From your firm's point of view, what is moving out? The cash in hand is moving out, isn't it? Because we are opening a bank account. That is your own account, but from your point of view, the cash in hand is moving out. So what goes out should be credited. Only one aspect you need to identify. So bank should be debited, and the journal entry would be bank account debtor to cash account. Understood? It's bank account debtor to cash account. Then the next is cash withdrawn from bank, the reverse. Cash withdrawn from bank. Cash withdrawn from bank. So again, which are the 2 items? One is cash, one is bank. What is moving out, or what we are getting? Cash is withdrawn from bank means what comes into the business is again the cash in hand. Understood? Cash and bank are the 2 items, and here cash is withdrawn from bank. So again cash is moving into the business. What comes in should be debited. So what will you debit? It will be the cash account you have to debit. The reverse entry will come now. Cash account debtor to bank account. Understood? Cash account debtor to bank account. Then 9th one, interest charged by bank. Interest charged by bank. Interest charged by bank. See, interest is charging by bank means they are taking the interest. Suppose you took a bank loan, and we know that on that loan amount we will have to pay interest. So bank will take interest from your bank account. Personally you will not go to bank and pay the interest. It will be deducted, or it will be taken from your bank account. So that is the meaning of interest charge. Charge means you can write here, it's taken by the bank. So what is moving out that we have to think before that? Which are the 2 items involved in this transaction? We have interest charged by bank, at the same time we have interest allowed by the bank, that is the next transaction. Okay, here one item is bank and the other item would be interest. Interest is what the bank is taking. Now what is going out or what is coming into the business? Here nothing is coming into the business. The interest is charged by bank. So what will happen to your bank account? Just think what will happen to your bank account. From your bank account they are taking amount. So bank is going out. What goes out should be credited. So the journal entry would be interest account debtor to bank account. Did you understand? They are taking amount from your bank account. So the bank account is going out. Going out means we are losing the amount from the account. So what goes out must be credited. Here what is going out? The amount in your bank. So bank must be credited. Then the next journal entry you write, the transaction you write, interest allowed by the bank. Keep the heading interest allowed by the bank. Interest allowed by bank. Yes, interest is allowed by bank means bank is giving interest to our account. Meaning suppose you opened a savings account, or usually the firms will be opening only current accounts. We people will be opening savings account, and on these accounts, on these deposits, bank will normally provide interest. That is something which we are getting. So interest allowed by bank means we are getting that. So which are the two items involved here? One is bank and the other is interest. What are we getting? The interest is what we are getting. How we are getting? It is to our bank account. Understood? So what comes into the business or what comes in is actually the bank account. Don't debit interest account. Did you understand? Interest we are getting in the form of bank. Interest will be added. Suppose 10,000 rupees is the interest that will be added to your bank account. So the bank account is increasing actually. So what comes in is the bank account. Clear? So the bank account must be debited. It would be the reverse. Bank account debtor to interest account. Here also you write account. Okay. Bank account debtor to interest account, because we are getting bank. Receiving aspect here is bank. Interest is the item which we are getting, but in the form of bank account. Clear? Don't get confused and don't try to by heart these journal entries. Now the basic entries are over with 10 basic entries, but in this chapter, entire chapter, we will be learning so many entries. So if you go and by heart all entries, that won't help you. You can't understand anything. You can't remember also. Finally, you will end up saying like it is a difficult chapter. So don't make the situation complicated. You just study the rules first. Better you take that receiving aspect and giving aspect, or debit what comes in, credit what goes out. That's the simplest rule, and that is what you can make use of for writing journal entry. And then you study these entries. First you have to learn those rules, then you study these entries. You have to always think which are the two items, then identify only one aspect, that is enough. Whether it is to be debited or credited, you just think what is moving out or what is coming into the business. So easily you can write the journal entry. So don't by heart, okay.